Hey everybody, Courtney Smith here with our Wall Street winners for January 25th, 2021. Another profitable week in the Wall Street winners universe. Welcome aboard, everybody. Let's get going here. And this is always a big profit, so we'll just hang in here. All right, S&P makes new all-time highs. I think we're going to continue to move higher, but it's going to be very sluggish. We're not going to see an explosive bull market. We're going to see a sluggish bull market. Let me go into the details. But first, let's look at the Dow. Notice that the Dow, the little green line in the upper right-hand corner shows that we've got a solid buying pressure, but we also have solid selling pressure. That's one reason why I think we're going to, I don't want to say struggle higher, but grind higher, but nonetheless move higher. Over here in the NASDAQ, Papa-rama. Look at that gap that we left last week. Looks very impressive. Purple predictor looks good. We saw some extra strength here in the NASDAQ. Looks like maybe we're shifting back. We seem to be going 1 week in favor of the NASDAQ, 1 week in favor of the S&P. Okay, seasonality remains bullish. That means you must be taking larger than normal positions. And that's one reason why here at Wall Street Winners, we crush the competition because we use contextual or environmental factors in order to change the size of our positions. Nobody else does that. Let me repeat that. Nobody else does that. But you are basically, when you subscribe to Wall Street Winners, you're getting a hedge fund in a box, okay? All right. Utilities, pretty neutral. Technically, yeah, so who cares? All right. Now, let's take a look at the seasonality. Very interesting. So right now, here in the latter part and right into the very beginning of February, we see a bull move on all four of the lines. Now, the most important ones, unfortunately, are the red and the purple, because that's the first year of a Democratic president, that's the purple, and the post-election year after the incumbent party lost, that's the red. So you can see it looks like a little rally here, and then look at February into early March. A month of prices going down. Now things look better after that, but we may have a bad February. We'll tell you more about that when we get closer to February, but right now we need to remain long and strong. Asset allocation moved to a new high. This is great. We're sucking money out of the bond market and we're putting it into the stock market. Thank you very much, bond traders. Stock market risk. They want more risk. This shows you why they're into the NASDAQ rather than the S&P. They want riskier stocks, technology stocks, healthcare stocks, biotech, etc., etc. Global shares? Interesting. The U.S. shares are now outperforming the EFA here. For a long time, we saw the overseas shares outperforming. This is related. The reason why you see these changes, it has to do with the dollar. If the dollar is strong, that's bad for EFA. If the dollar is weak, then overseas markets will outperform the U.S. market. The yield curve stabilized, but at the highest level we've seen since the COVID crisis. This is getting more and more bullish. Slowly, the Fed is allowing long-term interest rates to move higher. Now, it's stabilized this week, but it's just a week, so I'm going to say we're still in a bull market in the yield curve, and a bull market in the yield curve is good for the economy and good for the stock market. Bonds stabilized here, but I think the pressure is all on the downside. Let's take a look at our indicators here. Up at the top, that's gold. Right now, it's going down, which would suggest that we should see lower long-term interest rates. Underneath that is the red and black chart. That's commodity prices. It suggests higher long-term interest rates. Then the green line is long-term interest rates, and then the blue line is long-term interest rates in Germany, the biggest competitor. And normally they're lower than U.S. rates. So it's a neutral because they're lower here. Now, the thing is that you may say, well, but gold's going down, so that means interest rates should go down. But you really have to look at gold 6 months ago because it's a leading indicator of interest rates, particularly when combined with the CRB. The CRB and gold went up from April of last year until gold peaked out in August. So that when both of them are going up, that's a 6-month leading indicator of interest rates. So it's still on a signal telling us higher interest rates. Dollar, as I say, it did a little bit of strength here, and that's what caused the global shares to kind of stall out and the American shares to do better. All right, over here, gold. What a mess. Look at that. I mean, we're basically at the same price we were at the beginning of the chart, which was the end of July. So gold's going nowhere. Forget the Johnny One notes. All right, our indicators, neutral. All right, so who cares? We'll ignore gold for now. Crude oil starting to cap out a little bit. Once again, this is partially related to the dollar. If the dollar's strong, that means crude oil is more expensive all around the world, and that makes demand go down, particularly in poor countries that can't afford the higher price. So we've seen the price of oil go from $34 to $54. For poor countries, that's a killer. Okay, that is a killer. And then have the dollar start to rally? That's a double killer. Bitcoin, really interesting. We broke to new lows. We're technically in a bear market now in Bitcoin. So you got to get out of Bitcoin. You can't be in Bitcoin now. If it's a bear market, you cannot be long. You can hope and pray that it'll go up again, but that's not rational trading. But the purple predictor is a bit bullish. So it doesn't look like it's going to be a big bear market right now, but it's going to be sloppy. I think the best place to be is to not be in Bitcoin right now, is to stand on the sidelines. All right, everybody. Freebies, love having you here. Fully paid up members, hang on just a second. Hey, everybody. I've just released a free video on how to claim your part of the $10 trillion collapse of China. I know this is shocking. It's going to surprise you, this video, but you're going to learn a lot. And you're going to learn why, for example, China will never be a bigger economic power than the United States. Nobody believes that, but I'll show you mathematically why that is true. And you're going to see some of the shocking changes that are occurring inside China that are going to choke off its economic growth so that it falters and starts to be a weak economy. All you have to do to watch this video is to go to wsw2021.com/China-collapse. That's wsw2021.com/China-collapse. The video is absolutely free, and it also tells you how you can get a special report that I've just finished, which details some specific trades to make money from the collapse in China. Their debt level is higher than any country on the face of the earth. It's surpassed the United States. It's surpassed Japan. It's a disaster. It's completely in bankruptcy right now. And I'm going to show you how you can make money from it. So go to this website right now. Watch the video. It's absolutely free. At least enjoy it. Learn something from it. It'll open your eyes to what's really going on in China, not the blah, blah, blah that you hear all the time in the news. All right. I'll see you on the video. Bye-bye.